So in this one, I'm going to show you the simplest trading strategy that you can use to become a profitable FX trader. Now, most of you guys have been asking me to show you a strategy based on top-down analysis, supply and demand, and all that. Remember, I've shown you guys multiple strategies already, but in today's video, I'm going to break down a very simple Forex trading strategy that will transform you from a losing trader into a profitable one. So be sure to watch up to the very end, drop a like, subscribe, and also comment down below, guys. And remember, guys, some of you have been asking me for the mentorship program, for the trading course and all that. Guys, if you want to be involved with that, go and join the Telegram channel. I have more information on there. So without wasting any time, let's go and show you this trading strategy that I use as a beginner to make myself profitable. I am sure that this is going to turn your life around and make you a profitable trader. And if you become profitable using this strategy, please go buy me a coffee. Okay, so let's go on the charts and I'll show you the strategy right now. So guys, we are on GBP USD, on GBP USD chart, 4-hour chart, as you guys can see. So I'm going to show you a very simple strategy, as I promised you. I'm going to show you very simple FX strategy, guys. Make sure you don't skip the video, guys. Make sure you don't skip. Watch up to the very end, and like, comment, share this video with your friends. Go join the free Telegram that I have in the description down below. And if you're looking for a good broker that you can sign up with, there are 2 brokers I recommend. The links are in the description down below. So yeah, we are here on the 4-hour chart, Great British Pound US dollar chart. And what I want to show you is a price action based strategy that is very simple, very simple. And this strategy is based on break of market structure on a higher time frame and also a lower time frame confirmation based on a break of structure. So what do I mean? We can look at we can look at like a trend forming. In this strategy, what you want to do is you want to look for a trend. Okay, look for a trend. Like the market should be creating a trend, higher highs, higher lows, higher highs, higher lows. Okay, so here we have a trend forming, like you can see here, higher highs, higher lows, higher highs, higher lows. Okay, here, or it's a moment. Let's see from this side. Okay, let's begin from here. You can see that the market in this example is creating a low, okay, lower high. You can call this low is not very significant. Okay, this is the low because it takes out this low. So we have a lower low here. Okay, then we'll have a lower high, then we'll have a lower low, lower high. So you can see the market is creating a downtrend here. Okay, so what you do in this case, when you see that the market is trending to the downside, you confirm your trend is down. Okay, what you do is you mark your lows. Okay, like example here on the 4-hour chart, you mark the lows like here now. Okay, you mark this low here. Zoom in so that you guys can see. Just make sure you mark this low, okay, and wait for the market to break that low. Okay, now to show you that the trend is changing, this strategy is based on the trend and the break of structure. So when this low is broken by this bearish engulfing candle, there is a retest that happens before the market goes down. Now that is the retest that you want to look for. Okay, that's the retest you want to look for. Okay, so what I would do is maybe I would go to say 1-hour chart. Okay, go to the 1-hour chart and try to see if we can zoom into that same area. This is the same area right here on the 1-hour chart. Okay, because I want to look for a trade that I can swing for like 2-3 days or maybe even a week. Okay, so this is the same area where the market broke structure right here, and then there was a retest here and also here. So what you do on the lower time frame, on the lower time frame, what you are looking for is, after there is a break of structure like this, many people get caught up by just entering on the breakout like this, okay? And then they put their stop loss just above this area like this, okay? Like this. You can see what happens when you put your stop loss there, okay? The market will return to the upside, take you out before continuing to the downside. So you find yourself losing out on a trade that continues in your direction because you're jumping in too early. What you would do is you wait for the market to pull back up, okay? Wait for the market to pull back up. When the market pulls back up, you try and wait for a bearish confirmation pattern, candlestick pattern, okay? That can be through black cross, that can be a bearish engulfing, whatever you do, look for entries around the breaking point or slightly above breaking point, okay? So in this case, you would see that the market gave us here this. You would enter from here, 1, 2, 3 black cross. You could enter from here, set your stop loss just a few pips above this, okay? A few pips above. Then you can target a 1 to 2, 1 to 3, whatever, okay? Like this. Or if you missed this entry, you can enter after this bearish engulfing here, okay? Like this, just a few pips above. Then you would still have a 1 to 2, 1 to 3 risk to reward, okay? So this strategy is based on the break and retest, break on the higher time frame, and then you look to enter on a retest of a lower time frame, break of structure. Now we will look at it on the flip side on, for example, let's go back the 4-hour chart. We'll look for that same area, okay? We'll look for that area, then we'll see. Okay, so this is the same trend. The trend continues down and then creates this high, creates this low, okay? Now, when this high is broken here, okay, let me just show you guys. You can see here, there is a break of structure, okay? There is a break of structure. That candle breaks above this one here, okay? Breaks above this high, meaning that the buyers have become more than the sellers within this current market. So what you do in this case is you don't just enter here. That's what I told you. Don't just enter when there's a break like this. Because when you do that, the market will come and stop you out before going in the right direction, as you can see here, okay? You can see here it stops out, then comes and choppy, then it goes up. What you do, wait for the market to price lower, okay? When the market prices lower, you start looking for your entries on a lower time frame. Good entries on the lower time frame, okay? In this case, you would see that the market was kind of choppy here, creating small lower lows and lower highs here. You can see it broke again below, then it created this low, that high, then a lower low which breaks this structure here, then equal highs, then like that it was ranging here, then it broke this structure down, then created a high, then created a low, then broke this high going up here, then came back and broke these lows here, like that. So here the market was ranging. You wouldn't enter a trade here, okay? Because if you enter a trade in the ranging market, remember you have to trade only when there is a trend happening, okay? So here you just be monitoring to wait for when there is a trend. So the trend happens, the real good trend happens here, okay? You can see here when this high was broken, this one. When that high was broken by this candle, don't enter, wait for it to pull back. Once it pulls back down like this, okay, then you start looking for your entries around here on the lower time frame. Okay, we'll go back there and then we'll check and see. Go to the 1-hour chart. Let's check the 1-hour chart. So we can see the same area on the 1-hour chart right here. Okay, so this is the same area. Market broke above, then pulled back down. Now when the market pulls back down here, what you're looking for on the lower time frame is a continuous trend or a slight change of trend to become bullish, because when it breaks above, it comes and starts creating like a small trend which breaks this low. Okay, it starts creating a small trend going down. So you don't trade this kind of trend. You wait for it to break up again into a bullish trend on a smaller time frame. So you can see that here it's creating a high. Okay, it creates a range here, then creates a range, a small high, then a low, then a high, then a low. Here you're not trading, you're waiting for a break of a high on a lower time frame. So this high is broken around this area here. Okay, as you can see, this high is taken out around here, right? It's taken out there on the lower time frame, which confirms now that the momentum is about to change to bullish, because you've seen on a higher time frame there was this breakout. Now this is the retracement on the lower time frame. This whole thing is a retracement on the lower time frame. Okay, this whole area here, this is a lower time frame retracement. Okay, that's a lower time frame retracement. So at this area here now, you see there's a breakout to go to the bullish trend from this retracement. Then what you do is you start to look for confirmation candlesticks around this area. Okay, here you see you got like after the red candle, you saw these wicks rejecting. You've got 1, 2, 3 white soldiers. Then you could place your buys around here. Okay, your stop loss can be below previous low here. Okay, you can have your low below this low. Then you can target like a 1 to 2, 1 to 3, whatever. Okay, you see that that trade will play out well because the trend continued bullish. Okay, you can see you got that trade. So guys, that is a breakout strategy that I wanted to show you. Hope you guys have learned something. Guys, drop your comments. Go and follow me on my socials. Links in the bio down below. Okay, and also ask questions. Suggest the content that you guys want to see or something that you want to learn. Suggest it in the comment section down below. Till next time, guys. Peace and out.